And when it comes to commodities, there are two major events happening this week for the commodity side of the story. One clearly is the U.S. Fed meeting, and while the tapering of the bond purchases is one part that might get announced, the other is the guidance on the interest rates. And the second most important event is going to be the OPEC and allies meeting. That one is on November 4th, and their statement in sense of demand and supply for the global markets, any guidance from there as well will put some impact on the crude prices. Let's discuss both of these with Peter McGuire. He's CEO at Exim Australia, and he joins us now live on the show. Peter, hi, good to have you. First of all, on the U.S. Fed meeting itself, what are you expecting? What kind of impact can we see? Because the U.S. dollar is trading at a one-year highs ahead of this. Absolutely,
Manisha, and happy Diwali to yourself and everyone in India on CNBC. So, first off, I think the 120 billion per month as far as monetary policy. I think that there's talk, and it looks like we're going to shave about 15 billion off that per month. So that's where I'm expecting the Fed. I'm not expecting any great surprises. One thing that does worry me as far as those September unemployment numbers that came through the non-farm payroll, I should say, at 194,000, that's going to have a very large impact as far as Jay Powell's thoughts moving forward. And we've got Friday, of course, the non-farm payrolls coming out for October. So I would say they should have those numbers preceding everyone else, and they'd be able to make a valued decision as far as what impact they have to the tapering cuts.
Peter, with that expectation, what is your sense on where would you see the dollar and the gold prices going forward?
I think you're going to see stronger dollar from here, because if they do look at raising rates and trimming that, trimming the 15 billion a month, Manisha, so a little bit of a stronger dollar, maybe a 94.5, 95 handles possible. And the other side, of course, is the inflation story. And you would think traditionally, if you've got raising rates, you'd have possibly, gold might have to take a little bit of a backward step. But I think the issue at the moment is we've got strong Bitcoin, we've got strong demand for a lot of the precious metals. I think gold and silver will have a run in 22. I can't say a price, but I think it'll be stronger than where it is at the moment.
And any percentage gains that you're giving out on that?
Well, I think it's got to come up, Manisha. We did see the 1900 handles, the 1950s nearly. I can't recall what the actual height was, but, I think we're going to see over this next matter of years a stronger price from where we are at the moment. Yeah, possibly up another 10, 15%, very conceivable. The issues quite simply are runaway inflation. And that's the story that is on everyone's radar. We've been talking together for the best part of 6 to 8, 10 months on it.
And one part
Yellen's thoughts, Manisha, Janet Yellen saying inflation is here till the end of 22. That worries me. That worries the consumer, and it worries me what price we're going to see as far as crude and energy stocks over the next matter of 3 to 6 months.
Oh, yes, I was coming to that because a part of inflation also comes in from the high coal prices, gas prices, and the crude oil prices. So are you looking at this OPEC meeting with a lot of interest, or it's going to be on the expected lines?
I think it's on the expected lines. I think they're rubbing their hands with glee. I don't think there'd be a producer out there. The only one that wouldn't be rubbing their hands with glee might be the likes of Venezuela or someone that wants a higher price than what they are at the moment. But everyone, all the analysts that I talk to and read across the world and some of the big banks, they're saying that very much, 100's in the bag. And here we are at 84, 83, 84, and probably nearly 85. And some are saying that their target line is 121. That worries me, Manisha. That worries me big time, to the likes of what impact it has as far as India, emerging markets, and BP's numbers coming out and saying, well, it's over 100 million barrels a day now as far as demand. We've got oil, being the consumption side of it, with increased flights and people traveling all over the Christmas period, and what they're reintroducing or re-engaging with the world.